Welcome to the My URS Pension and Social Security webinar. My name is Mike Wilson. I'm one of the retirement planning advisors here. And you may be wondering, why is URS talking about Social Security and specifically the windfall elimination provision? And one of the main reasons is in our pre-retirement seminars and our presentations, and in our one-on-one individual retirement planning sessions, it's not unusual for us to get questions about Social Security and more specifically about the windfall elimination provision. And so that's why we thought having a webinar would be a good idea for us because we want to get some good information out to all of you. Now, here's the good news. The windfall elimination provision, or the WEP, I'll just refer to it as the WEP from now on, doesn't apply to many of us. And so that's some good news. That's the kind of information, we know sometimes rumors get spread and information about this or that topic. Well, please spread the word about the WEP. For the most part, it's not going to apply to many of us. But even if it does, it ultimately results in a reduction in your Social Security benefit. But that reduction is often a lot less than we fear it might be. And also note, the WEP doesn't impact your URS pension amount or any of your 401k or 457 benefits. So the WEP, if it applies, only potentially reduces your Social Security benefit. It has no impact on the amounts you might receive from URS from any of our retirement plans. All right, with that in mind, let's talk about some specifics here. So first off, when Social Security talks about the WEP, they specifically mention this idea is that if you have a pension, the WEP may apply. Well, pension in Social Security language can mean a periodic or lump sum payment from any employer's retirement plan, and it can be based on employer contributions, can also be based on employee contributions. So in our system, for instance, if you're in the Tier 1 system and you have a pension benefit, that could potentially apply. If you're in the Tier 2 hybrid system, that also has a pension, that could apply. But maybe a bit of a surprise is the Tier 2 defined contribution plan or the straight 401k plan. So basically, any employer retirement benefit paid for by the employer could potentially be considered a pension from Social Security standpoint, and therefore may impact your Social Security benefits. So, is the WEP going to apply to you? Well, here's how things work. If you've only had wages from work where you've paid FICA, and FICA is the little Social Security tax, 7.65%, pays for Social Security benefits and Medicare benefits. If you've always paid FICA your entire career, the WEP isn't going to apply to you whatsoever because, in essence, you've been paying into the Social Security system. On the other hand, let's say maybe you worked in the private sector for a few years and then you joined a public agency that doesn't pay into Social Security, then the WEP may apply. And again, it's going to depend on the agency, whether the agency participates in the Social Security system or not. In the URS system, some examples of agencies that may not pay into Social Security: some of our technical colleges, some fire agencies, some public safety agencies, a few counties, even some cities don't pay into Social Security. If you're not sure, you can always talk to your HR department or your payroll department to see if you are paying into Social Security or not. Or you can just look on your pay stub, and if you see FICA, FICA listed on there and a dollar amount, that means you are paying into Social Security. And again, if you are, and you've always been paying into Social Security, then good news, the WEP doesn't apply to you whatsoever. So when Social Security gets ready to calculate your benefit, here's kind of the basic overview of how the Social Security system works. So assume you've paid into Social Security. You have to, in order to get a benefit, you have to have at least 10 years of what Social Security calls work credits. And 40 credits, same thing as 10 years. And right now, that means you have to earn at least $1,300 a quarter where you're paying FICA taxes. And if you do, then ultimately what Social Security will do is they will look at your highest 35 years of earnings, and that's what they use to calculate your Social Security benefit. And that's why if you look at your Social Security statement, for instance, you'll see all your work history listed there, 10 years back, 20 years back, however long you've been working. The reason they're showing you all those annual earnings is because the Social Security system uses your high 35 years to calculate your benefit. And Social Security was specifically designed to provide more income for long-term lower income workers. Remember, it is a welfare program originally, so it was designed to support those folks who just weren't making as much originally. So knowing that, then the windfall elimination provision, the WEP, is designed specifically to address those workers who appear to be low income and they have a state or local government pension, or as we talked about, a 401k or 457. So here's kind of how it works. Normally, let's say you've worked maybe 10 years in the private sector, you paid into FICA, and then you jump to an agency, a public agency that's not paying into Social Security. And let's say you work there 25, 30 years or whatever. So when you go to retire and say draw your Social Security benefit, Social Security would look and they would say, oh, hey, this poor person, they only had 10 years of earnings. Gosh, they must be a low income worker. So we're going to try and give them more, a higher percentage benefit overall. But when they discover that, oh, you worked 10 years in the private sector, paid FICA, paid into Social Security, but instead, those remaining years, you were covered by a state or local government pension. You're really not a low income worker after all. You were, in essence, just paying into a different type of retirement system rather than Social Security. So that's what the WEP is designed to do. So, and the WEP is actually based on the number of years of what Social Security calls substantial earnings. Now, what does that mean? Well, let's talk about that. So every year, Social Security Administration has a dollar amount that they calculate for what they call substantial earnings. And you can see here on the slide all the different dollar amounts for the various years. So let's say, for instance, 2010. Maybe you were working for a public agency, but maybe you had a part-time job where you paid FICA, had a part-time job, say in the private sector. Well, that year, if you only say made $10,000, that wouldn't count as a year of substantial earnings because it's below that 19,800. If you made 20 or 30,000, on sort of this part-time job or full-time, whatever it was, where you were paying into FICA, then it would count as a year of substantial earnings. Now, more good news, if you have 30 or more years of substantial earnings, then the WEP, again, isn't going to apply whatsoever. And note, substantial earnings, it's not the same as that earnings credit that we were just talking about, which was only $1,300 per quarter in 2017. When you look to the right and you see the dollar amounts listed for substantial earnings, you can see they're much higher. So again, to qualify as a year of substantial earnings, you have to meet that year's minimum in a FICA paying job. 2018, by the way, sorry I didn't have the slide updated, but the 2018 dollar amount is $23,850. And by the way, when Social Security says you're, in essence, entitled to a pension, in our system, that means if you've been here 4 years, you are vested, which means you have a legal right to your benefit, whether it's a pension, the straight 401k plan, whatever the case may be. At that point, then if you're in a non-FICA paying job, working for an agency that's exempt from Social Security, then these rules, in essence, would apply. Now, what's the potential reduction to your Social Security benefit? Well, it's not, again, as I said earlier, it's not going to be as bad as you think. So let's look at an example. Let's pretend we have a worker who is age 62, 2017. Social Security's formula kind of has 3 buckets, if you will, that they use to calculate your benefit. This first monthly bucket, the max benefit that could apply would be this $885. The second bucket runs from 885 up to a few thousand, if I remember correctly. If you want to know more, you can jump on the Social Security website and see how it's calculated. And then the third bucket goes out from a few $1,000s, even higher. Most of our Social Security benefit dollars are in those second and third buckets. The WEP really only applies to this first bucket. So again, the good news, if the WEP is going to apply to you, it's going to be probably a lot less than you think it might be. So anyway, so this first monthly bucket, $885. The WEP, the way it works is you're going to multiply this 885 by the percentage based on your years of substantial earnings, and that's how many dollars in essence you keep in the first bucket. So, for instance, if you have 30 years or more, then you get 90% of the first bucket. And just a point of clarification, anybody, whether they've been in Social Security, paying in Social Security their entire career or not, the most you can get in this first bucket for everybody is 90%. Again, that's just the way the Social Security formula is set up. Where the WEP can apply, though, is let's say you only had 20 years of substantial earnings. Well, in that case, then your first bucket benefit, instead of being $796.50, that's the most anyone could get. If you have 20 years or less, you're going to get 40% of that amount. So you're only going to get $354 at most in this example. And again, that's why I say the reduction really not as much as we sort of fear or think it might be. In fact, a little bit more good news. Let's think about this real quick. So your greatest possible WEP reduction, again, using that same scenario, worker age 62, 20 years of substantial earnings, the most that would be reduced per month, $442.50. So if you're, let's say your benefit through the normal calculation process looked like it was going to be $1,500 a month, and the WEP applies, and you had, say, just the 20 years of substantial earnings, then instead of getting $1,500, you're going to get $1,057.50, if my math is right. So again, worst case reduction, $442. Now, if you start your Social Security benefit after your full retirement age, the WEP dollar amount might be a little bit greater, but that's because you would have a little bit greater Social Security benefit. And again, good resource here, publication, the windfall elimination provision. It's a little two-pager. It's pretty easy to read. You can download it off the Social Security website. The web address is there. If you don't want to remember the link, all you have to do is type WEP into the search engine on the Social Security website. And that Social Security website is just SSA. And again, just to clarify, the WEP only applies to your Social Security benefit. It is not going to affect the amount of your URS pension or your URS 401k, 457, anything like that whatsoever. So some additional resources for you. I'll leave this here for just a sec so you can look at them. These are basically all on the Social Security website. You've got a phone, you can take a picture of this screen so you don't have to remember them. Or, like I said, if you'll just go to ssa.gov, you can type in WEP, you can type in retirement benefit, and you'll see lots of these resources. Some of them are charts, some of them are documents. They have a nice calculator there, the third one down, where you can actually enter in your years of substantial earnings, and it'll calculate an estimate of what your benefit will be. If you're not sure how many years you have, you can always go to ssa.gov. You can create an account with the Social Security Administration, just like you have one with URS, and you can look up and see your years of covered earnings, your years of service, if you will. And you can see your current benefit statement there as well. It's typically there in a PDF format. And always, you can also call Social Security. Toll-free numbers there, 800-772-1213. They're open from 7 a.m. to 7 p.m. I will tell you their phones are busy, so you may want to call at a time when you have some time to just kind of set your phone down maybe and wait, because it may be a while before you can get through to speak with them. But again, lots of resources there for you. One other kind of good news resource for us, particularly here in Utah. Um, Mickey Douglas, who works for the Social Security Administration, Public Information Officer, she often speaks at our pre-retirement seminars. She's going to be holding a WEP webinar herself, and she'll get into even deeper detail. So if you want to know more, you can email her. Her email address is listed there. It's mickey.douglas@ssa.gov, and you'll be on the list. Not sure when she's going to hold that, but feel free to reach out to her and email her. And of course, anytime you have specific questions, we always encourage you go to the source. If it's a question about URS benefits, man, come talk to us. But if it's about Social Security, talk to the Social Security Administration. Again, lots of those resources that we listed there for you. So with that, we will wrap up the WEP webinar. And again, if you have more questions about your specific situation, because again, everybody can be a little bit unique, please reach out to the Social Security Administration to get the specific answers. With that, we are done. Thanks for your time and attention.